You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 27th day of August, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. On the days that you're out of the office, away from the desktop, point any internet-connected browser to CFRN.net/live. There you'll find a live real-time simulcast of the show as it unfolds. You just won't have access to the chat box. When you join using the link from the home page, you only have to do that once. Then what will happen is each day, right before the show starts, you'll get an email. In that email is a link. If you click that link, you join with one-click access, and you have access to the chat box so that you can ask questions, and participate in the discussion. We also stream live during this broadcast on YouTube, Facebook, and Twitter. Let's open with a word of prayer. Father, we thank you today for your love, for your faithfulness. We thank you for your protection and care over our families. Thank you, God, that you give us the power to love well, the wisdom to lead and teach our children. We know you're for us, that you fight for our families today. You are Redeemer, Restorer, and Friend. We believe that you have good in store. We confess, God, that some days parenting is tough. Many days we feel anxious or overwhelmed. We ask, God, that you would make us more like you, more aware of your constant presence in our lives. Help us to release our children to you so that you are free to fully accomplish all that you desire in them and through them. And we pray, God, that you keep them safe today and every day. Please fill all of our families with your truth and cover us with your favor. In Jesus' name we pray. Amen. Amen. Happy Thursday. All right, let me give you the numbers from around the world. These are the cash markets, or the indices as they're called. Currently the Dow is up 238 points. NASDAQ is up 29. S&P 500 is up 15. And the Russell 2000 up 6.5. No movers, no shakers, at least not yet. The Dow would be the closest. It's up almost 1%. Speaking of the Dow, believe it or not, is having its best August since 2004? Nope. 1994? Nope. 1984. True story. In the commodity basket, crude oil down 31 cents, trading 43.08 last. Gold down $17.10, and what a wild ride gold has been on today. Of course, we'll talk about that when we go to the charts. Gold trading 1935.40 last. Silver down 30 cents at the moment, trading 27.14 last. In the Asian markets at the close, Nikkei down 82 points, Shanghai added 20, the Hang Seng lost 210, no movers, no shakers. And in the European markets, the FTSE dropped 45 points, the DAX dropped 93, and the CAC down 32. Pretty quiet trade. It was a mixed day in Asia, a red day in the UK, and so far it is a big green radio Thursday here in the US of A. We'll go to Michael and get a recap of what happened in the live training room this morning, if you're ready, Michael. And today is Dr. Tom Day, so he'll be joining us at the top of the hour. In the meantime, while we're waiting on Michael, I'll run over this recap with you real quick. I know I've got it right here. Okay. Couple more clicks. And I'll have it ready for you. There's Michael.
Here's Michael.
So if you want to go ahead and you're ready, you can grab it whenever you're ready.
Okay. I'll just grab it then. Here we go. Sharing, change presenter. Make it me. I don't know, it's acting weird right now.
What is?
Go to webinar.
What happened?
The login took too long, and right now it's not letting me change the presenter to be me.
Well, that I don't.
Unless, yeah, and I can't share my screen because I can't become the presenter.
Okay, I'll make you the presenter. Let me find you in here, and I'll do that.
There.
Oh,
Okay, now it just came up. It just came
you
up.
got it. Okay.
Okay.
There you go. I see your charts now.
Okay, good.
Okie doke. All right,
All
I'll
right.
turn it over to you. It's all yours.
Okay, here we go. Good afternoon, everybody. Today is Thursday, the 27th day of August, 2020. I'll just go through the spreadsheet right away. Okay, I'll tell you, if you want to become a member of CFRN, go to EminiFuturesTrading.com. EminiFuturesTrading.com. But here on the spreadsheet, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 27th day of August, 2020. And we picked up 19 ticks in crude and 4 ticks in gold. Put us at plus 230 on the morning session. Today it took 8 minutes and 1 trade to get to the goal for the day. At that point, we're up $110 a contract. We took a total of 5 trades. On the month, now we're up $9,063. That's over 19 trading days, averaging $477 per contract per 2-hour trading day. And we are now on a 134th consecutive day of getting the goal. Let's see, on the year now, we're at $62,374. That's over 159 trading days, averaging $392 per contract per trading day. Now I'm going to go backwards again. Normally I would go from left to right, but I'm going to go from right to left again because gold is where all the action was, and I'm not going to go over everything because we had charting issues this morning, but I'll go over what we did and what we didn't do. I'm going to start at 10 o'clock, I think is what I said, because I think there was just so much action that it consumed the databases and bandwidth. So we'll start out right here. Now, I didn't do anything with the ES today, but there was a shorting opportunity right there. And then it got really choppy for a few minutes. And then it gave another shorting opportunity there and another one there. And if you're doing the YBR stuff, we really didn't have anything in this big move down. And I'm starting at 10 o'clock, not at 9:30, because we had technology issues this morning. Where some of the charts are working, some weren't. I was walking people through trades without charts. Just telling them what to expect out of a trade. Where I thought the market was going, and I don't know. I have to watch a recording. I think I did a pretty good job. But here we had a bounce off the BBC, and we had blue on the YBR, and we had good separation. So that was an easy long trade right there. Then it got a little choppy. We still had the blue on the YBR with an up close and bullish separation. So it gave you a little heat, but it did end up going up. Okay. Moving on down the line here, I'm looking at the slingshot, and it's not really letting you do too much. Over here, right on the YBR with the down close and bearish separation. And, that nailed it pretty well. It was also, if I'd have drawn a trend line, it would have been a trend line trade right there. Okay. And then it just got really choppy, and we didn't want to do anything in that. So then during the break, we had a long right here, but that was going into the high of the day. So we probably wouldn't have done anything with that. On the pullback, though, the pullback area over here, there was a short there, a short there. And that was pretty much it for the ES. And crude oil, we put on 3 trades, looks like. Now, I got one crude trade before 10 o'clock. Right here is where we got the goal for the day. We picked up 11 ticks on that one. Picked up 11 ticks on that one. I'm sorry. And we picked up 8 ticks on this one. And we had a break even on this one. And see, then we get into the break. And during the break, there was a long there, and a long there. And that was pretty much it for crude. So, on the euro today, we had just one break-even trade right here. It was break-even. Okay, we didn't get anything in here. We did get a little bit of something right here. There it goes, right there. But that was during the break. And then it just got choppy, and there wasn't anything to be had. There was a YBR long here, a YBR long here, a YBR long here. Now, this is, well, we had technical issues this morning. It wasn't us, it was Gain Capital had technical issues this morning. And you see this right here. That's where I had to catch up. And then after that, you got to let a whole bunch of bars go so that the indicators can get back to normal and be reading enough bars to indicate properly. So we really didn't want to do too much right there. Yeah. Okay. And now we'll get to gold. Good Lord. Gold was all over the place. It still is, and it's still trading really thin right now. But what I was trying to do with gold today, to the best of my ability, is let people know what to expect out of a trade if we had an entry based upon the charts. And, I only took one trade on gold, and I picked up 4 ticks. But, like right now, I can look at gold and say, okay, well, it's kind of a mixed bag. And on the upside, it's going to go up to 37. On the downside, 35.3. And there's 35.3. So, I was doing my best to let everybody know what to expect, because it was bouncing around so much that, I suggested just not trading it. But, and I only put one trade on. I highlighted a few here. See, that was a close above the trend line, a close above the trend line, a close above the trend line, a close above the trend line. And all of those would have been profitable trades. Okay. Right here was a nice YBR trade. And I'm trying to get back to my trade, the one that I did. Did we make it up to 37? I'm scrolling all in the wrong direction here. But here's another nice YBR, another nice YBR, another nice YBR. Another nice YBR, and another nice YBR. I'm trying to get back to my trade. It was just one trade for 4 ticks. But, you know, during all of this action here, where it was bouncing up and down and bouncing up and down, I was trying to let people know what to expect if they got into a trade setup based on the charts, you know, based on the indicators. But we had that problem, so the indicators were thrown off a little bit, you know, for like, well, with gold, it wasn't that bad. But then gold was just about not tradable. Let's see here. Let's see a nice YBR. YBR. Now you have to consider that the YBR takes everything into consideration, and even things that you don't see. It takes it all into consideration, but everything that you do see, it does take into consideration. Okay, now the trade in gold, I don't know where the heck it was, but nice YBR trade, nice YBR trade, nice YBR trade right here. And you only need one of those, and you can see there were several. Here's the trade. Finally, we get back to the trade in gold. Okay, so we had a bounce off the BBC right here. You see that? And we had blue on the cycle. We had bullish separation, and the MA1 stayed blue. So that's the highest probability trade right there. And it went so fast, I only got to take 4 out of it. I was looking for, I think, 11. And from the entry point, which was down here at 46.8, it ran up to 47.9, but I couldn't move my stop fast enough. And so that was my day this morning in gold. Now it's still trading really thin, and you know, what did I say a few minutes ago? It's going to get up to 37. So it did that. And what did I say on the downside? I think I said 34.4 or something like that. And it did both of those things. Now, when I say things like that, you got to have the charts be in agreement with you. Okay? The charts have to be in agreement, right? Or with me. Like right now, the charts are saying it's going to go long. And on the long side, it's going to go up to 36.2, now 36.4. On the short side, it's going to go down to 34.6. But the charts are saying, you know, stick to the long side. So there's the 34.6. Now we should get to the 36.2. Okay, but the charts are saying, well, now the charts are saying don't do anything because you just stopped out. but you know, when I'm throwing out these numbers, like I started doing, I mean, this is stuff that I always thought and I just didn't say. And so now I'm just trying to help everybody. No. I'm just reading. I'm just reading what you just posted. Do you do you want me to read that out loud? Okay. All right. Okay. Yeah. I know you stand. I strap myself in. Now, I know. Doing the college thing with the with the basket. Okay. Now, if that looks like what you've been looking for, if you're tired of the gimmicks, gurus, and parlor tricks, if you're ready to learn how markets really work, if you simply want to learn how to trade using our super simple strategy, just point your browser to eminifuturestrading.com. Okay, I'm going to say that again. eminifuturestrading.com. Okay, go there now, and tomorrow morning, I'll see you in the live training room, begin teaching you on our super simple E-mini strategy. Trading's not easy, but it can be simple. How simple? Well, just go to eminifuturestrading.com and I'll see you at the bell.
That's simple.
There you go. All right, and with that, I'll pass it back out to you, Dwayne.
Simple is good.
Yes.
Love simple.
Yes. I love simple too.
Let me grab charts. Okie doke. Recap of the recap.
Today, it took 8 minutes in one trade to get to $110 a contract.
Good job.
Thank you.
Okie doke. All right. Let's do this real quick, guys, and then we'll go to the charts. Sorry I missed you guys yesterday, but I did do a recap yesterday afternoon. So for those of you, some of you have already seen it because I posted a link to it in the discussion group. But if you want to watch yesterday's recap, it's there. It's in the YouTube channel at youtube.com/CFRN. And as of today, 12 noon on a Thursday, Dr. Tom Day. So I'll move quickly. All right. This week we have issued a total of 41 alerts. We're still waiting on the results of 2. 3 of them never triggered. We've had 36 actionable alerts. 3 of them have been stopped out. So that's 8% of the actionable alerts have been stopped out. Now that's based on not risking more than $300 per contract per trade. Last week, which was week 107, this is how we finished up the entire week. We had a total of 100 alerts, 69 were actionable, 15 were stopped out, so 22%. Now, as I said, we averaged 20% over the last 107 weeks. So the previous week was like 12%, so that was better than average. Last week was a little worse than average. And so here's where we were on Monday when we started the broadcast. Tuesday at noon. Wednesday at noon. And here we are today as of noon. 36 actionable, 3 stopped out, 8%. Now, you might notice we had 100 alerts last week. We only had a total of 41 in Logic 247 so far this week. Okay. Now, that has to do with the fact that we're at the top. Okay. And markets behave in a bizarre manner. It's probably the best terminology. They don't always do the next high probability thing. And with logic, an alert is based on when opportunity presents itself. Not just any opportunity, but high probability, low risk opportunity. So, I don't know what the final tally will be for this week as far as total alerts. It will be 100% based upon whatever the markets hand us. Okay? But let's go back for a moment before we go to the charts. And let's take a look at Sunday night. Okay? Sunday night began week 108. Again, that was the final tally on week 107. We didn't make our 20% benchmark, but we were close. Okay, week 108. Now, on Sunday nights, the channel opens for business. The alert channel, the logic, that's the ones that are based on current price action. Okay, the logic 247 is based on, the concierge is based on historic price action. Logic based on current price action. And quite often you'll see them both point their finger at the same important price, important area. So when you're putting on a trade that is backed up by current price action and historical price action, those tend to be some very attractive, high probability, low risk opportunities. So we did start an hour late. The time you see on the screen is Pacific. I'm in Arizona. We don't do daylight savings time, so 8 months out of the year I am on Pacific time. So this would be 7:03 Eastern. The first alert was to be long the S&P at 34.03. The initial target was 34.05. Then we knew there could be potential resistance at 34.06. We made it through there. So the third target was 34.18. The swing high was 34.2150. So from 34.03 to 34.18, even though we exceeded that a little bit, this third target, 1, 2, 3, that's 15 points. At $50 a point, that's $750 per contract traded. Nice trade. If you have a look at the concierge from Sunday night, and if we have time today, I'll go through those. Actually just watch Monday's show, because we went through the concierge on the Monday show, every single one of them, just like we do every day. And you'll see that there is an alert on the concierge that lines right up with the logic 247. The next one was the Dow to be long 27,985. We ran up 100 points at $5 a point. That's $500 per contract traded. Now it goes without saying, because I say it every day, but I'll say it again in case you're new. Once you earn the right to trade 10 contracts, then that would be a $7,500 move. That'd be a $5,000 move. But don't put the cart, don't put the cart before the horse, because that gets awkward for the cart and the horse. Okay. When you become a member, you start out in the simulator, because you've got to learn our very simple strategy. Michael mentioned it's a super simple strategy, and it is. At first, it may seem a little confusing because we're using some very basic principles that maybe no one else has ever showed you, those basic elementary principles. Because, like if they just show you everything all at once, they can't sell you more stuff later on. See, they gotta always keep something a secret, and when they run out of that, then they gotta invent new stuff. We don't do that. We've been using the same strategy, same indicators. We haven't changed a rule. We haven't changed the line of code in the indicators, and I think it's over 8 years now. If something's not broke, there's no reason to fix it. So Sunday night, 2 trades into the new week. This first one was good for $750 per contract. This was $500 per contract. You should be trading in SIM if you're brand new, because you got to learn the strategy before you put real money to work in the markets. Even if you've traded previously, if you've traded live before and blown up accounts like most traders have, don't feel alone. You're not the only one. Spend the time required in SIM to make sure you understand the strategy. Well, how much time is that? We want to see you put together 10 consecutive days in a row where you reach your goal in 10 trades or less before you go live. In fact, we have what's called the 24/20 blueprint. That's designed to take you from 1 to 20 contracts over a period of 24 months. Now that would be in a perfect world where nothing ever went wrong. or you never took a vacation, or you never had to go to the dentist, or you never got sick, or I haven't found that perfect world. If you find it, please send me the address. I would like to visit it sometime. But it gives you a step-by-step blueprint. Am I saying it might take you longer than 24 months to actually get to yeah, that's exactly what I'm saying. Okay? But you always know where you stand. Now, once you have put together those 10 consecutive days in a row, when you reach your goal in 10 trades or less, the blueprint will give you the green light to go live with one contract. Just one. And that's what these numbers represent. Just one. Okay? Now your goal, now that you're trading real money, you want to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. So the $100 a day becomes $200 a day. If your goal is $100 a day, 2 points out of the S&P, or 10 ticks in gold, or 10 ticks in crude, whichever market that you choose to trade. See, so many traders get tripped up because from the beginning they have unrealistic expectations, right? Now, not only are we teaching you a very simple strategy, but we're giving you these alerts at the same time. So you're learning in the morning, going to class, spending 2 hours with Michael, learning how the methodology works. You're learning those underlying principles, how to read the chart, how to read the indicators. And at the same time, we're handing you these alerts in the channel, okay? But again, you should still be trading in SIM until you put together your 10 consecutive days in a row. The big deal about the second contract is you're not adding that with your personal savings. You're adding it with profit you earned in the market. That's why the goal with your first contract is to increase your account balance by $2,000. When the blueprint tells you to add contract number 3, number 4, number 5, number 10, number 12, you're always adding that additional contract with profit you earned in the market. If the blueprint tells you it's time to add the next contract, but for some reason you don't have enough profit in your account to underwrite it, you don't add. In fact, you book a mentoring session with me or Michael because our members have access to unlimited one-on-one mentoring with myself, with Michael, with both of us. Whatever it is you need, we're there to help you, okay? So, now remember, we're still on Sunday night here. So, the S&P from the entry to the target, 1, 2, to the third target, that was good for $750 per contract traded. The Dow was good for $500 per contract traded. The Russell, the entry was 1560, the target was just 1562. We actually went up to 6470. But just as it's written, in at 60, out at 62, that's 2 points, $50 a point. That's $100 per contract traded. On the NQ, the entry was 11,610. Initial target 620. Second target 675, and the swing high was 676. So we made it to the first target, made it to the second target. Now that's 65 points. The NQ pays $20 a point. So that's $1,300 per contract traded. Because remember, if you're new, you're trading one contract in the simulator. I want you to practice in the simulator with one contract, because when you go live, you're only going to trade one contract until you increase your account balance by $2,000. Now, that's not going to take very long if you grab a hold of, a couple of those, 4 of those, okay? Now, this is all Sunday night. S&P, Dow, Russell, NQ, here comes crude. The entry was 55. The initial target was 65. We made it up to 66. 10 ticks to the target. 10 ticks at $10 a tick. $100 per contract traded. Along comes gold. Entry 1952. The target 1954, which also happened to be a weekly trading zone. So that's a 2-point move. Now we actually went up to 57.80. Okay, so from 52 to 57, that's $500 per contract traded. But for the purpose of this exercise, I'm just showing you what it was to the target. 2 points, $100 a point, $200 per contract traded. And then came silver. Okay, the idea was to be short 26.65. Initial target 26.63. Second target 26.55. Third target 26.41. Now the swing low was 26.33. So we didn't make it to this target, but we exceeded this target. So from the entry to this target, it's 24 ticks at $50 a tick. It's $1,200 per contract traded. And then we had a hedge on silver. We had two-sided action Sunday night on silver. The idea here was to buy 27.05 to 27.07 to 27.20 to 27.35, and the swing high of that move was 27.34. Okay, 30 ticks at $50 per tick, $1,500 per contract traded. And then the final logic alert Sunday night was gold to be short 1934, initial target 1933. The next target was 1928, but the swing low was 1930.8. So just taking the entry to the initial target, even though we exceeded it by a fair bit, 34 to 33, that's 10 ticks at $10 per tick. It's $100 per contract trade. Then we get into Monday, and it would take up the whole show to go through every one of these for you. But this information is available to all of our traders all the time. Now the alerts, of course, come out live in real time in Logic, right? And you've got time to get to your computer, sit down, get your thinking cap on, get your trading cap on before these things actually trigger. Typically, you'll have a minimum of 15 minutes. Sometimes it'll be a number of hours, but you get the heads up ahead of time. Okay, so on Monday, the first one, S&P was good for 11 points from the entry at 34.27, 29, 38. So we made it to the second target. Swing high was actually 39.75. It's 11 points at $50 a point, $550 per contract traded. And then we had a long on the Dow, and then we had a long on the Russell, long on the NQ, we had a long on crude, we had a short here on gold. This one never triggered. This was an S&P. Then this was a Dow short, a Russell short, gold short, NQ long. I'll do the math on the rest of these for you later. S&P long, the entry was 32, 34, 38. The swing high was actually 42. Okay, so we made it to the just beyond the second target there. Here's the Dow long. This was my mistake, a duplicate. This is a silver that never triggered. Here's a Russell that was stopped out. Here's a long on the Dow. Here's an S&P that was stopped out. And so now we're into Tuesday, 25th. Here's a long on the S&P, long on the NQ. No trigger on the Russell. Stop out on crude. Here's gold. This was a long. Target was 41, made it up to 43. That's a $300 per contract move, but just to the target, it was a $100 per contract move. Here's a long on silver. Here's a long on gold. NQ long. Silver long. S&P long. Still waiting on a disposition for this one. Here's a long on the Dow. Now the entry was 290. We made it up to 322. Still waiting on a disposition here. Okay, this was a hedge on the Dow. So the market was in a position, it could have gone either way, and when that happens, we hedge our bet. Although we don't call it a bet because that would be like gambling, and because we have a definable edge, it's not gambling, it's trading. That's why it's important that you have a definable edge. Here's a long on silver and a long on the NQ. Okay, so I just walked you through every one of the Logic 247 alerts so far this week. So when I show you this recap, now it makes more sense. 41 total alerts. 2, we don't know what's going to happen to them yet. 3 of them we wrote off, they never triggered. 36 actionable alerts, 3 stopped out, 8%. Now, when Michael said earlier, if you're tired of gimmicks, you're tired of parlor tricks, if you want to just learn a simple strategy that has been able to produce this type of results over the last 107 weeks. Now again, this week's better than normal as far as being stopped out. Now the risk on these alerts, Concierge and Logic, we don't risk more than $300 per contract, per trade, less when possible. I teach all of our traders a 3-step methodology based on market structure so that you know, based on what the chart tells you, exactly where to put your stop loss. Now, a lot of methods, a lot of strategies will use some type of formula or a percentage of the ATR. You know, there's a number of different methods out there. We just cut to the chase and we look at the structure of the market. And once I teach you this very simple 3-step method, you'll be able to use the same method and you'll know exactly where to put your stop loss, and you'll also know when an opportunity is not worth the risk required. Okay? All right, let's jump real quick to the daily chart of the S&P. 2 days ago, Mike B in the audience, he said, well, since we don't have anything to look left at, could you run the Fibonacci price extension tool to see where price might be going? And so I did. Now we only measured just this last leg up. We did not do, the entire leg because we wanted to find a number that was close proximity. So from this last leg, from the low to the swing high to the retracement low at the BBC, right there, this 14th century math told us that we should anticipate a swing high on this move of 34.96.99. Now today's Thursday. I think it was on Tuesday's show that Mike B asked me to do that. Swing high was 34.98 1/4. So I don't know, we missed it by a couple points, but I did say it's an area. Okay, fibs are always an area, just like weekly trading zones are an area. Sometimes price will turn right at the fib, sometimes price will turn right at the zone. But always remember, even though they both put an exact price point on your chart, it's always an area. Okay, all right, now let's go to the 30-minute chart. And I'll try to move guys that were in the room this morning, when we hit that 100% fib extension, I said, now here comes a pullback to the BBC and the weekly trading zone. I said, if the pullback holds, then that, should give us a bounce that takes us up to test the highs. I said, if the BBC fails to hold, if the highest weekly trading zone fails to hold, then we might just be looking at the turning point. Now, the turning point is the beginning of the pullback that takes us to the BBC. Price always reverts to the mean. In our case, the mean just happens to be green. So you can see we pulled back to the BBC here, and 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 it's coming. Now, can I say with 100% certainty that's what's going to happen? I cannot. No one can. God didn't give us the ability to change the past or know the future, and those two things are inextricably linked for eternity. But, pretty good starting point. Now, coming down on this daily chart, you see how the step line and blue and climbing, you're joined at the hip right there. And so that price is roughly $34.43. Okay? We may get a bounce there. We could get, in fact, it could give us a bounce that sends us all the way back up to challenge the high. Potentially more. We execute our trades on smaller time frames, but this bigger picture on the daily gives us sort of a bird's eye view as to what's going on, and it helps us to see obstacles that are in our path. If we take our retracement tool and we measure this same last leg up using the different fib tool, okay, the daily BBC is just below the 24% Fibonacci retracement. That's the shallowest fib retracement. But just keep in mind, we have potential support right here. If we get through that support, then the high probability move is right down to the zone. Not to the zone, but to the fib and the BBC. Now, John just rang us. Today's Dr. Tom Day. Let me go ahead and open up John's mic real quick, and we'll finish this recap. I want to go through each and every one of the Concierge Trade Alerts with you and show you exactly what happened with those last night. But let's talk to John. Let's talk to Tom. And John, you're muted on your end, so I can't open your mic. Let me see if Dr. Tom's here yet.
How's that?
Oh, there you
better?
go. Yeah, gotcha.
Okay.
Welcome
Listen,
to the show.
sorry to come out a bit late. There's been a lot of drama in the last half an hour, as probably everybody realizes. Look, the market's potentially run out of good news, and the Fed thing this morning was a bit over the top, and I think the market's not buying it, at least temporarily, and is selling off quite markedly. We kind of laid out the case yesterday. I should have been more attentive to the fact that the market kind of ran ahead of us with this UVXY, which I highlighted was actually going up, even though the S&P was up 30. Should have put more emphasis on that reversal, because the market was telegraphing us. It was ringing a bell for sure, at least ringing a temporary bell. Put it that way. We are going to rally a bit right now. Maybe they'll nip this in the bud. They have a habit of doing that. But the fact at the moment, the way the UVXYs are shaping up, you've got a major weekly reversal and a potential daily.
Guys, we haven't got to this yet, but take a look at this move on gold today.
Well, that's I was just coming to that. I might as well quickly just say my piece there.
Yeah, go ahead.
I actually laid out.
This is the 30-minute chart.
Right. I sort of laid out a scenario yesterday where I said, great rally, but what we've actually had here, which I think is rather devastating, in fact, is we've had an ABC. We talked about these ABC rallies off this correction, And of course, they dress it up so you look good because we've gone up in the last few days. Everybody's thinking that gold is up on its next leg. I'm not so sure. And I pointed that out yesterday. And if you look at the daily, you'll see that the whole thing is breaking down badly. And I think we actually looked at that on the daily yesterday and commented the same. I mean, look at it. It's changed the entire picture. You see how bullish it looked yesterday, Dwayne? Mm-hmm. And look what happened today. So this is really, really bad now because we've sort of completed. We're on a C wave, and possibly leading to we've had an A wave down. We had a B wave, which didn't go to a new high. Not very good news, right? And now we're potentially set for a C wave down, to the 17, probably 1800, maybe 1750. But after that, then I think we'll get our juggernaut gold move all the way up to 2700 potentially. So all this is, this might last, a week or a month, and it may consolidate, but it's probably going to consolidate in this general range, which I would describe as building value at higher levels prior to the next major up leg. And even though and what will happen, usually in the second correction, which is, if you take the March correction as the first correction, and if this now is a second correction, the next up leg in gold should actually be short. The down leg should be short-lived that we're talking about right now, and the next up leg should be very, very powerful. So that's kind of the way I see it.
There's the March
and it
right
will lead, and I think that will lead to higher gold prices down the road. Sorry, higher market prices down the road as well. If we get a rebound, either mid-September, October, something like that. So I think we're, look, just for those who don't know, Tesla made a new all-time high this morning at 2290. It didn't, we had 2300 as a target, if you remember. Mm-hmm. And it dropped more than $100, just like we said yesterday. It's making a pretty powerful reversal there. I think I'd take my longs off the table if I was long, and consider going short even here. So we made this peak today, classic sort of very, very hyped up type scenario. We've got the risk of the split coming apart next week with possible devastating consequences. Remember, look at just put up Netflix for a minute, if you wouldn't mind.
Sure.
This is what we talked about yesterday might happen to Apple. Yesterday, by the way. In other words, Netflix had that miss, came down, dropped $100. If you look at Apple today, we're already giving up the ground. We looked at the dojis yesterday. They didn't look very good. And look at that. That's exactly what we said yesterday, basically was going to happen. And it's happening. And I actually had STMP as a potential short today. I'm sorry I didn't put it up yesterday, but I had it earmarked. And it's already on the way down. So, dollar-wise, that's a great short because I don't know, we're down probably $10 or something, $10 or $20, something like that. But obviously if you're able to afford shorting a stock like that.
We got a high of 68.90. We got a low of 55.90.
Yeah, so I had that pegged for a short today, $10 down already. I wouldn't be surprised if it gaps down, either tomorrow or next week. It's got a very bad structure, and this thing's probably headed back to 200, along with a whole host of other issues.
This is an unusual. This is unusual. This is very bearish here, but you tend to think of bearish.
It's the ultimate island top.
Yeah, you tend to think of that as a bearish engulfing, where it engulfs the entire candle. But what's interesting is we engulfed just the body of that doji, but yeah, definitely bearish.
Right. Well, if you remember, we did our homework on this, a few weeks ago when I mentioned how it did the same thing. It got hyped up before the last peak, and it kind of dropped down, and look how much it went down. So you scratch your head when you see this because you say, well, how if it was so great, why are they, hitting the heck out of it? What was interesting was the way it held above the gap. It didn't quite close the gap, and it's become a monster performer. This stock, just like all the others. So now we're the sort of quantum levels higher, And, the downside possibly could be much more extreme. So, for a lot of these stocks, I think today's the first wake-up call, the market's had in a while. That things are...
There's a question for you. Why do you think the Tesla split will fall apart?
Well, because I told you the story about this Commerce One in 2000. This is a real lesson. Now, admittedly, it wasn't a Tesla. It was a company that was at the forefront of e-commerce, and it was like, the future of the company doesn't exist anymore because, number one, it was one of these companies that had like 3 or 4 billion in revenues and was probably losing 6 billion. It was technically bankrupt, number one. It got to $1,000. They split it 10 for 1. It opened at 100, and by the end of the day, it was at 90, down 10%. The following day, it got down to 30 or 40, and there was a fella who turned 40 grand into 20 million, and I told him to get out right at the top, and he wanted to hang on to the last 10%, and I said, forget about it, just sell it, because it's going to zero. The company went out of business. So look, there were giant mistakes made in 2000. When you get a situation like where we are today, and I guarantee you, half the CEOs in America are thinking, we're in heaven, the stock market's going through the roof. They're not. The first thing that's been going on is there is some insider selling starting to come in from these companies. Secondly, there's stock buybacks back in, which to me is the kiss of death. And thirdly, the companies that are laden with debt are not getting rid of their debt, and I think that's a fatal mistake. And if you don't believe me, GM was $100 a share in 2000. They could have got rid of all their liabilities and all their overhang and all the billions in pensions and everything else that they were liable for, and nobody did anything about it, and the company went bankrupt by 2009. So, you have to take advantage of. It's just like even Microsoft, and I've used this example before. Bill Gates is one of the smartest guys that ever lived, but even though a lot of people don't like him today, but anyway, he did make 2 major mistakes. Number one, he tried to put Netscape out of business, cost his company billions of dollars in all kinds of fines and troubles with the government. And secondly, right before the crash of 2007-8, he paid out $3 or $4 in dividend in a one-time dividend. Why do you give money away for a rainy day? How do you know the future is not going to be bad? 2 years later, they could have used those billions, tens of billions they paid out, 30, 40 billion to make all kinds of acquisitions at the worst point of the whole thing, of 2009. So, cash is king. The more cash you have, it's just like Apple. Why is Apple going up today? Because its cash is king. It's making a ton of money. So, that's one of the reasons why it's gotten to this point. And, they bought, listen, do you know how much stock they bought back? They've reduced their share flow drastically. So they have achieved unbelievable gains. They've become the richest company in the world. So you can't fault them for what they've done. They've done an unbelievable job. Steve Jobs must be raving in his grave.
Yeah, right.
But it's interesting. But the bottom line is, nothing lasts forever, and we're getting into a kind of a wake up call to that effect today.
Indeed.
So, listen, have a great afternoon.
All right, John.
Thanks. Bye.
All right. Thank you. Okay. All right. I see Dr. Tom has arrived. So, again, guys, go ahead and take your screenshot of the Concierge Alerts. We're going to go through these one by one, just like we do every day. But we're going to do it after we talk to Dr. Tom. Now, the S&P this morning in the live training room, when we hit this price, that 14th century math told us that could be a potential swing high. And if you go back and watch Tuesday's show, you'll see us draw it and blah, blah, blah. And then I talked about it yesterday afternoon on the recap I did that's on YouTube. So is it? Well, there's potential support here at blue and climbing and the step line. If we get below there, and if we get below this low, yeah, then it's pretty much on down to this 24% fib retracement and the BBC. That should be good support. We should get a nice bounce. But I'll talk you through all of this, and as Dr. Tom's talking, I'll have a look at the markets here. We may have actually there's already a short alert in the channel from last night. So here, Dr. Tom, let me get your mic open so you can say hi. I'm looking for you. There you are. Dr. Tom, welcome to the show.
Well, thank you, Brother Dwayne.
Good to have you.
Appreciate it. Thanks, and it's good to be here. I was just thinking before I came online. I talked to some of your students from time to time. They'll call here to find out about gold and so on, and they love you. I mean, you have. I guess you could see it in your panel there, but some people just never miss one of your sessions, and
well, that's very kind.
That's
very kind.
Greatly respected.
Very kind of you to say.
Yeah.
Well, thank you. Thank you very much. To God be the glory.
Amen.
All of us are just His hands and feet upon the earth. What would you like to talk about today?
Well, everybody knows that inflation is a bad thing, but I want to talk about how we can actually benefit from inflation.
Well, this incredible move that we saw in gold overnight or this morning, well, it started at 9 this morning. So this morning, this is a 30-minute chart, had to do with the Fed's, the statement that was made by the Fed today about a historic change in monetary policy. Are you up on that statement that was made this morning?
Just that it was made. I don't really know. Have a chance to get much into it because I had a busy morning.
Let me tell you what they said. I had it. Let me look under news.
I know that Trump has been broadly hinting about going back to a gold standard.
It had to do with huge move in gold, Fed, inflation. I just want to find. Yeah, here we go. Gold dives 2% as dollar yields gain after Fed comments. Gold slumped over 2% in volatile trading on Thursday as the U.S. dollar and Treasury yields rose after Federal Reserve Chair Jerome Powell shifted the central bank's inflation target in a widely expected move. Spot gold fell 1.5% to 1925.19. Prices had risen as much as 1.1% during the speech until he got to that point. And I'm trying to see what the exact language was that he used. The Fed said it will allow modest overshoot in inflation, is very positive for gold, according to Daniel Galley, commodity strategist at TD Securities, but the market already anticipated that, so there is no new impetus to buy gold. The U.S. Central Bank rolled out an aggressive new strategy to lift employment and will seek to achieve inflation averaging 2% over time, offsetting below -2% periods with higher inflation for some time. Powell's speech sparked a roller coaster ride for asset markets, especially gold. Now, you want to put that in plain English for us? The Fed has pumped in massive stimulus and kept interest rates near zero to lift the U.S. economy from the impact of the coronavirus, which has also weighed on the labor market as new claims for unemployment hovered around 1 million last week.
Well, that's pretty much what Japan did 20 years ago. When
what is it the Fed's doing? They say it's a historic change in monetary policy strategy. What is it they're doing? Historic new Fed policy. That's what they're calling it.
Well, from what you've just read there, it doesn't sound like anything new.
Yeah, that's what I was looking for. I was hoping you'd be able to spot the obvious that I'm obviously not spotting.
Well, I'm a Fed watcher, obviously. You have to be if you're in gold. But
a Fed watcher.
Throughout the last 40, 45 years, the various different Federal Reserve chairmen would say some weaselly little things like, well, sometimes we have to allow some inflation to prevent deflation.
Okay.
But Ben Bernanke was probably the smartest guy, in my opinion, who ever ran the Fed.
Really?
And he was more honest. He said it is in the interest of the federal government to create inflation because it, in effect, lowers the national debt. So, and that's a direct quote, to create inflation. So when people talk to me about, I hear these talking heads on TV, oh, we have to watch out for deflation. Deflation can never happen as long as the Fed is committed to a policy of inflation.
Okay. Fed Chairman Jerome Powell announced a major policy shift, and he called it average inflation targeting. That means the central bank will be more inclined to allow inflation to run higher than the standard 2% target before hiking interest rates. So is basically what he's saying is that, what is he saying?
He's saying that they're going to keep doing what they're doing, but
they're not going to raise interest rates. I mean, that's just completely off the table.
Yeah, and that's been one of the ways they've combated inflation. But you have to remember that the inflation rate that they quote constantly is not the real inflation rate. I've recommended on your show shadowstats.com. Stats and statistics. It's an independent economist, but there's lots of them out there. He just has to be the best, in my opinion. John Williams. If you want to know the truth about any economic numbers, you don't go to a government economist because it's in their interest to downplay inflation, because the higher it goes, the higher the COLA goes, the cost of living adjustment for Social Security recipients, federal retirement recipients, and that's a lot of money. 0.5% difference in inflation is billions of dollars more they have to pay out. But also, if they quote the real inflation rate, it makes the government look bad. Just like if they ever quoted the real unemployment rate. The inflation rate got so bad during Jimmy Carter's years that they totally recalculated the way that inflation was done. And the main things they did were to take out energy and food from the calculation. Well, yeah, I don't know about you, but
nobody uses that stuff.
Right, yeah. And not only that, one of the main things that should be calculated when you talk about inflation is taxes. I mean, some Americans are paying as much as 50% of their total income in taxes. So that should be part of it. But anyway, the new inflation, the new CPI, John Williams shows the adjusted CPI, which is what they always quote, 2 to 3%. Then he shows what inflation was using the standard that was used all the way up until Jimmy Carter became president, and it's usually double or more, 2 to 2.5 times. And most economists will tell you, if you want to know the real inflation rate, the real unemployment rate, just multiply it by 2.1, 2.2, and you'll be pretty accurate. And the other people you don't want to listen to are university economists. That's the first ones that TV goes to interview because they got doctorates, you know. Well, I got a doctorate, and that didn't make me any smarter at all. I could testify to that. So can my wife. So you have to go to independent economists. The reason you don't want to listen to university guys is because most of their research is funded by federal grants. So if they say things the government doesn't like, their funding gets cut off. So bottom line is, if you want to know what's really happening in your economy, to your pocketbook, go to shadowstats.com or any of the many honest,
here's the
independent.
website right here, shadowstats.com. There it is.
So if you look at the inflation chart, you'll see usually he's got three different numbers. He shows the new CPI, or the adjusted CPI, Consumer Price Index, then the old CPI, which is really by law what we're supposed to be using, and then he shows the shadow CPI, because he does his own calculations, and the inflation is always way higher than what the government shows. Let's see.
Yeah, here's where he's talking about exactly what happened this morning. Right there.
Okay. Will generate higher inflation for a while, somewhat after the fact. Okay. Yeah, they've been doing it for a while. Moderately above 2%. Well, I don't think they're going to mitigate the effects of the economic crisis caused by the China virus by messing around with interest rates. There's only one thing that's going to work, which is to unlock our economy. The Treasury Secretary said we're the only nation in the history of the world that has ever deliberately shut down their economy. And it's opened up to a large extent in Republican states. But states run by Democrats are still just like communist states. They're tightly controlling everything. And they're loving it because they like to control. And so this is great. And then they get to blame it on Trump. They say, oh, the pandemic is not being controlled. But it's the governors that have to do it. Trump can't make them open their economies. The president has power, but he doesn't have ultimate power. He's not a king. He's not a dictator. And these governors are acting like dictators because they're refusing to even consult their legislature. Emergency powers, emergency orders, executive orders, all of those are only supposed to be used short-term in emergent situations. And then they're supposed to go to the legislature, who the people elect to do things like this. They don't elect governors to unilaterally override the legislature. Michigan, that Liz Whitmer woman, she has just totally ignored her legislature. They told her, okay, you had emergency powers, you used them in the first few months, but now we're taking over and this is what we want to do. Mm-hmm. And she just ignored them as if they didn't even exist. So we have all these little autocracies going on in Democrat states, and it will continue until after the election. Whether it works or not, I doubt it, but they're not going to give up until then. But once November 4th arrives, the China virus ends, the lockdowns end, and to a great extent, I think the riots will end because they're being encouraged by the Democrat mayors who go out and stand in solidarity with the rioters to get on TV. So November 4th is going to be a good day for everybody. Except one of the presidential candidates.
It's a big day, I'll tell you that. I mean, the fate of our nation really hangs in the balance. I think every election they probably say this is the most important election ever, but I really think it is this time. I really do. I mean,
yeah, I've heard that ever since I was a kid. Every election, yeah. You're right, they do say that, but there's so much more at stake now because we have just two polar opposite worldviews. I'm not saying that all Republicans are Christians because they're not, and I'm not saying the Republican Party is a Christian party because it isn't. But if you just look at the platforms of the two parties, the Democrat Party platform is, no other word for it, it's satanic. Okay, they call for more abortions, federal funding of abortions, partial birth abortions, where the head is out of the mom, but the body's still inside. And then they stick scissors in the stem of the brain.
Well, they're
of
trying
the
to
baby.
take it even beyond that. We'll keep the baby comfortable while you make up your mind what you want to do.
Yeah, they're calling it post-birth abortion. Okay, it's murder.
There's
Baby's
there's
born.
people sitting on death row for that.
Yeah,
Murder. Just
that's true.
It's I don't know, put any kind of label you want on it. I mean, now here's my concern. You know, so far, in fact, all during the convention last week, the Democratic Party they didn't even really talk about the violence, as if it hadn't happened or wasn't going on. Now,
There was not one mention of it.
Now,
whatsoever.
whoever is funding these people, okay, and they're getting paid to do this. I don't care what anybody says. These people are getting paid to create the carnage, to burn down cities. They're getting paid. Now, many people point the finger at Soros as the one who's funding this whole business. I can't say with certainty that he is, but a lot of fingers do point to him. Now, imagine a world where Joe Biden comes out and all of a sudden says, hey, all of you people tearing up America, I get your message. I'm going to fix things as your president, and I'm going to ask you now to stop. At the same time, Soros sends a memo to everybody, we're done. I'm not paying you anymore. The violence will cease. There'll be no more carnage. There'll be no more fires. Except in California, the whole state's on fire. I looked at a map the other day. It's very scary. Do you follow what I'm saying? I mean, this whole thing may be just a setup to give Biden some godlike persona where he waves his hand and says, violence, stop. And it stops. I mean, the thought's very scary.
Yeah, because with enough money, I mean, if you read my article last week on Conservative Truth about Black Lives Matter, they use a source. It's called Crowds on Demand, I believe it is. It's in the article. There's a website where you could hire protesters and rioters, and in any part of the country. It's like a movie production company hiring extras to play the cowboys and the Indians or whatever. But these are professional rioters, and you pay this company and they send the people wherever you want them. And every police department that's honest, that's been experiencing these riots, reports a huge influx of license plates from other states just before the riots start. So there's no question that they're being paid, but that's an interesting thought. I hadn't thought about it that way, but yeah, if he says, okay, stop rioting, and Biden can somehow take credit for that, then that would be a huge advantage to him.
Very, 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 very frightening. Crowds on Demand,
Yeah.
your home for protest, rallies, advocacy, audiences, PR stunts, political events, services available nationwide. Are you looking to create a buzz? At Crowds on Demand, we provide our clients with protests, rallies, flash mobs, just mobs, paparazzi, and other inventive PR stunts.
Yeah.
Wow.
Yeah, I thought that was pretty amazing.
Yeah.
But, you know, President Trump has said that Antifa is a domestic terrorist organization. He believes that Black Lives Matter is as well, but he knows that if he says that publicly, that would tank his chance of being reelected. Because I've talked to a lot of black people, Christians, people who should know better, And I ask them with no inflection or anything, just, in other words, not trying to lead them into what I want to know, I want the answer to be. I'll just say, tell me what you think about Black Lives Matter, what it does and why it exists. And almost all of them say, well, they're advocates for equal justice for black people and preventing black people from being killed by police. They don't have a clue. If you go to Black Lives Matter's website, they're very open about it. The three women who founded it, two of which are lesbians, which is why they say one of our prime directives is to support the gay, bi, lesbian, queer, trans. I can't remember all the different genders we have now, about 30 of them. And they're, one of their main directives, or their main goals, is to support that community. And there is practically nothing on their website about equal justice for black people or anything like that. And they say we are trained Marxists and trained Marxist organizers.
We know that police don't keep us safe.
Yeah. And we know that cops are just roaming the streets, white
looking for
cops,
somebody to wail on.
Looking for a black man to murder. I did an article about this about a month ago, and because that's the narrative. There are every day, according to Al Sharpton, every day, black men are being hunted down on the streets like dogs and killed. Unarmed black men by white cops, right? So I did a search of all the people who were unarmed, who were killed in confrontations with police. There were 21. So that's not every day, and it's not even every week, right? 21. Most of those, the majority of them, were white unarmed men who were killed by police, black or white. Okay. The 9 black people who were unarmed and who were killed, number one, the police don't shoot people that are unarmed. They think that they're armed, and so that's why they do it in most cases. But the 9 that were killed were all threatening in some way the police,
right. And
most of them were killed by other black cops, not by white cops. So the whole narrative is just a foundation of lies.
Yeah, it is. Perilous times we live in, brother. Very perilous.
Yeah. Well, the Christians, if Trump loses this election, it's going to be the fault of Christians, because so many of them didn't go out and vote at all. And Hillary claims this 2 million popular vote advantage. 2 million is not a whole lot out of 326 million people in the country, right? But I doubt very seriously that she even won the popular vote when you counted all the dead voters. They literally go out in Chicago every year and write down names from tombstones and register them to vote. There's just massive voter fraud. But let's say that she did win the popular vote. The Constitution specifically is put in the Electoral College as a way to prevent a very, very small number of people controlling the country. Without the Electoral College, if it was just popular vote, New York and California would decide every election.
Right.
So, how the government takes money from the states and then gives it back if we do things that they like, but they keep about 60 to 70% of it. But there's always states that are complaining, well, our citizens paid so much in taxes and we only got this much back.
Yeah.
Well, if we do away with the Electoral College, it's going to be 48 states complaining that we're being paid all these taxes and we're getting maybe 10 or 15% back. In New York and California, who will decide every election from here on are getting back 80 or 90% of what they paid. So it's on the backs of the other states. So there's much more at stake than people realize.
Yes, there is. Yes, there is.
Christians need to get out there and vote and give the president a mandate. You know, we support you in your goal to put America first and not apologize for America. We support you in building up U.S. businesses and buying American rather than buying cheap junk made by slave labor in China. I got in late on it. I was hearing y'all talk about Apple. Apple makes billions of dollars off of slave labor.
Right. Right.
And it's totally unconscionable. But
It's
companies
so
don't have consciences.
It's so absolutely hypocritical.
Yeah. And then they put up these little nice ads on television how we donate to Black Lives Matter because we care about black people, or we donate to this charity or that charity, which is probably like just a tiny fraction of a percent of all the money they make. But they're making it on the backs of political prisoners who are forced to work, who haven't committed any crime. Their only crime was they disagreed with the communist China government. Or now we have a new class of people, the reporters and doctors and researchers and scientists who have told the truth about the China virus, how it was created by the Chinese Communist government and released purposely by the Chinese government. They're now in jail. You don't hear anything more from them, right?
Mm-hmm. Right.
In some cases, they disappeared them. They're not even in jail. They just disappear, which means, of course, they're probably dead.
Probably. And that's standard operating procedure there.
And yet we have companies, you know, like Walmart and Apple and Hewlett-Packard and Dell and so on, that are making tons and tons of money from the communists. That's why the schools don't teach civics anymore. That's why they don't teach that communism is evil, because the people who donate money, you know, Apple always donates computers to schools. Why? Because they can then control the curriculum.
Yeah.
We live in a very weird world, my friend.
And it's a write-off.
Yeah, yeah. Because if there's one thing schools need, it's computers. Because you have to train these kids for an economy
with schools not being open, right?
Yeah.
Yeah, my daughter has an iPad that was provided by her school.
Well, tell her to put a piece of electrical tape over the camera, because some perverts in some of the school systems have been caught spying on students, particularly female students, when they're undressing and so on in their bedrooms, and they leave the computer open, not even turned on. They can remotely turn the computer on and use the camera.
No matter where the computer came from, if you have a webcam hooked up or if you use a laptop, you need to make sure that thing's covered up, except when you're intentionally using it.
Yeah.
Because that's just hacker 101 for some, hacker to get into your machine and just turn the camera on without you even knowing it, without it even lighting up. That's just, from what I'm told, pretty basic stuff.
That's what shocked me. I knew that if you had the computer on, they could turn the camera on, but they can actually turn the camera on when the machine's turned off, and you think you're safe. So you should always close the lid, and black electrical tape works great because you can put it on and take it off dozens of times, and cover up that camera when you're not actually meaning to be broadcasting.
They even make these little things. It functions kind of like the way a money clip functions. Is you just slide it over the top. It's got sort of a U shape, and it just slides over and it covers it up real good.
Well, that's a good thing.
Yeah.
Well, do we want to talk about inflation a little bit today?
Yeah. Let's do it.
because I've got some interesting stuff for you.
You want me to see the charts?
Yes, please.
Okay. Stand by. Okay. You have the chart.
I have the power.
You got the power. Problem or challenge?
Okay, thank you.
Okay.
Yeah, last week
it's all yours. I got to step away for just like 2 minutes, but you get going, and I'll be right back. But you got the
no problem.
Right.
No problem. Last week we talked about inflation and the fact that God hates inflation, and the reason He does is because it hurts the poor and the needy, the elderly, and those on fixed incomes. At least theoretically, if you're employed, when you have inflation, as prices go up, your salary goes up. It doesn't always work like that, but that's the theory. In any case, definitely if you're employed, you're better off. And rich people don't really care about inflation. Matter of fact, they encourage it because they benefit from it, but it hurts everybody else. So it's the debt that causes inflation. Inflation is not rising prices. Rising prices are a symptom of inflation, but inflation is an increase in the money supply. Well, how is the money supply increased in America? It's by the United States government selling debt, including to our greatest enemy in the world, China, who hates our guts and owns over a quarter of our foreign held national debt, more than any several dozen of other countries in the world, and almost all of them own our debt. So it's the debt that always triggers crashes, hyperinflations, economic emergencies. This number is kind of old here, the $22 trillion US debt. It's actually 26.7, I believe, at the present time. I should have updated that. But it goes far beyond that, guys. This is all based on just the national debt that we acknowledge. In other words, the debt that's sold by the Treasury Department, the bonds and the bills and so on, and also actual direct debt obligations where people loan money to the government other than via the Treasury. It doesn't include the unfunded liabilities, which are far, far greater. Look up the International Monetary Fund, the IMF, and look for a list of nations by debt. And what you're going to find is they don't even care about what we call the national debt, this $27 trillion. They judge our debt the same way they do all the other 200 countries in the world, which includes the direct debt and also the unfunded liabilities, which is money that the government owes. Nobody questions that the government owes money and has an obligation to the citizens for Social Security, Medicare, and so on. Well, as of the end of last year, both the Social Security Administration and the Medicare Administration had end-of-year reports, and they said that they had about 6 years of funds left. If they were to do that report now, after we just had a second quarter GDP loss greater than anything in our history, including the Great Depression, and the GDP loss was around almost 40%, I believe that that number would be much different because our economy is contracting, not growing, and it would probably be more like 3 years. So this is not a political or partisan issue. It's math, like it says on the screen there. 76 million baby boomers retiring, living longer. Combine that with a very, very inefficient healthcare system and a tax code that is totally, totally barbaric. We're on a very, very risky path. If you look at the arrow there, this chart was done back in, I think, about 2016. Yeah, it shows through 2017. The debt's not growing gradually, as you see from 1960 to 1980. It's growing exponentially, and it just keeps growing harder and harder and faster. That's what's going to trigger the crash of the US dollar. That's going to make your money worthless, and it's going to put you in a position, if you don't have gold or silver, you won't have money, because the money that we think of as money is not money, it's currency. It's paper money. It's not going to buy you anything in that situation. Here's a list of developed countries and their sovereign risk index. And you see that the United States, our sovereign risk is very high. Okay, sovereign just means the debt of a nation, of a sovereign entity. If you remember a few years back, we actually lost our AAA credit rating, which is unbelievable. If you told me 5 years before that happened that it was even possible, I would have said you're crazy. But look at this chart. If you look at number 5, 6, 7, and 8, okay, those are some of the nations that have the greatest risk. And look who's there. The US, the UK, the Netherlands, which is a little tiny country, Holland, and Spain. Spain is one of the worst off countries in the world as far as unemployment and debt. Now, the really, really bad ones, Greece and Portugal, Ireland, Japan, they're up even higher than 0.75. But that we will be anywhere near the top of that list. And this is only the top 16 countries as far as risk to our debt. There are 200 countries in the world. And the fact that we would be number 5 on this list is shameful. We're supposed to be the most prosperous country on earth. But think about it like this. Have you ever had a guy come to your office and he's wearing a nice, expensive suit, and you look outside and he drove up in a Mercedes, and he's looking good? Because salesmen want to look good. They want to look prosperous, so that you'll think they're real. And then you happen to drop by his office one day, and you go in the front room, and there's no receptionist. And he hears somebody out there, and he comes out front, and he said, well, let's go back to your office. I want to talk. He said, well, let's just sit out here. It's more comfortable. The reason is that reception area is the only part of the entire 8-room office that has any furniture in it. His Mercedes is leased. That expensive suit you saw him wearing, it's the only one he's got. He's an empty suit. So when we say that the United States is the most prosperous nation on earth, we have this great standard of living, but it's at the expense of our children and our grandchildren, because we have increased the debt so much so we can put on that facade. I would rather us look like a middle-class country and get out of debt and not leave those shackles of debt for our children and grandchildren. The Bible says a good man leaves an inheritance for his children's children.
Yeah, that's true.
And the inheritance we're leaving our children is chains, debt. Now, I mentioned shadow stats earlier. If you want the truth about statistics, anything to do with economics, you go to a site like this. It's not the only one. There's lots of really great websites, but I like this one really the best. As I said, you'll never get the truth from government economists or university economists, but independent economists who just look at the facts and report on them, and then you're going to get the truth. So this chart here only goes to 2015, but the official inflation rate is the red line. Or, I'm sorry, the official growth in the nation, the growth of our economy. And that's the red line. And it's showing much, much better than it really is. The blue line, he calls it the SGS alternative. shadow stats, government statistics, not nearly as much growth as the government claims. Unemployment rate. Now, the unemployment rate that includes all the people who are really unemployed, the broadest one, the U6, shows us at this point with about 12% unemployment. Right now, the government's claiming 13%. But if you used the narrow official number, you can see down there it's about 5%, 5.5%, something like that. That's because, as I mentioned earlier, they took out energy and food from the calculation. So they're showing the real inflation rate is half of what it is, or the unemployment rate, I'm sorry. And then you look at the unemployment rate as calculated by independent numbers, and it's at 23%. Because if you're unemployed and your unemployment benefits run out and you're no longer getting checks from the government, you're still unemployed, but they don't count you as unemployed. It sounds ridiculous, but that's exactly, look up how is the unemployment rate calculated. It will blow your mind. If you've lost your job and you had a good job making good money, and now you can't find a job and you're working as a greeter at Walmart, making a third or a fourth of what you used to make, and you're having to live off your savings, you're basically unemployed, or at the very least underemployed. They don't calculate that at all. So here's the dollar index. Okay, they're showing the dollar at 60 right here. That's pretty bad when the dollar is only worth 60 cents. And that's just from 1985 on, looks like. They're counting the dollar being worth 100 cents in 85. And then by 2015, it's down to $60. But the real truth is it's more like $55. Consumer inflation, that's the one I was looking for. The official CPI, what they call the experimental CPI, they're trying to lower it even more. They're showing close to zero inflation in 2015, when the truth was about 3.5% inflation, and it's much, much higher now. You need to go in and update these charts. Same thing with consumer inflation. So here's what makes up the CPI, the Consumer Price Index. Okay, food and beverages, housing, apparel, transportation, medical costs, and so on. In the special index, they take out energy and food. So the total CPI, or what they call the core CPI, the core CPI is the total CPI, which includes, energy and food. And they take out those special indexes. So your inflation looks like it's half of what it really is. People who are in business know that the real inflation rate is much, much worse. So, is food a part of your living? Cost of living is energy? Of course it is. And taxes, which are never calculated and should be. So, they say that we're excluding food and energy because they're volatile. Well, any idiot knows that you could use a simple moving average to correct for that. Volatility doesn't really matter. But they're deliberately trying to downplay it. It totally ignores taxes, which accounts, if you count up all the taxes that the average American pays, from local city taxing districts, school taxes, real estate taxes, county taxes, state taxes. Almost all states in the country have a state income tax in addition to the federal income tax. And then the federal income taxes and all the hidden taxes, a lot of things you buy, including jewelry, airline tickets, gasoline, already have taxes in them before they're ever calculated to you. So then you pay tax on top of that. You call them excise taxes, translate hidden taxes. So most of us are paying at least 30%, and some Americans are paying up to 50%, and that's never included in the CPI. So, quoting the famous economic philosopher Dr. Tom Barrett, even if the other calculations of the official CPI were correct, the fact that it ignores taxes, one of our biggest expenses, renders it invalid as a measure of inflation. I feel it's okay to quote myself because other people have quoted me on that. All right. Here's what's going to happen by 2050 if we don't reform entitlements. We're going to be spending 42.8% of every dollar on non-discretionary things. Interest on the debt, defense, Social Security, Medicare, Medicaid, and so on. But yet, the revenues are projected to be half of that. Our historical revenues, if you average them from 1959 to 2008, are 18.1%. So either we're going to have to raise taxes greatly, or we're going to have to cut cost greatly, or these numbers are just unsustainable. You'd have to double the tax rates from what they are right now to balance the budget, and that wouldn't even touch the national debt. That would just cut down. You would say balance the budget. It would mean that the $1 trillion or so a year that we spend as borrowed money, we wouldn't be spending it, so we wouldn't be adding $1 trillion every year to the debt. But it wouldn't reduce the debt at all. We haven't paid a penny on the principal in 3-4 decades. This is a truly scary chart. Mandatory programs in 1970 were 19% of GDP. That's the gross domestic product, what they used to call the gross national product. And we had discretion as a nation over 62%. By 2012, that had risen to 57%, almost doubled the spending on mandatory spending, and our discretionary spending was cut in half. Interest is about the same. But by 2040, interest alone on the national debt is going to eat up 26% of all revenues, and discretionary spending will be cut back to 74%. So mandatory spending will be 76% of the total, which is 32% of our GDP. We can't survive that. These are entitlements: Medicare, Medicaid, Social Security. Look at that. If you compare it to all of our money that we spent on the war on terrorism, that's the first ball there. Our foreign aid doesn't look like anything. NASA, which is one of the big things we spend a lot of money on, much, much smaller. And the Corporation for Public Broadcasting, I think is money wasted. They should not get money to do liberal programming. If they want to run a liberal nonprofit station, let them do it with donations, but they shouldn't be getting government money. But again, that's dwarfed by this $2.5 trillion annually, and that was back in 2012. It's much, much greater than that now. Social Security deficits, they're permanent and they're growing. By 2035. We're going to have a $344 billion deficit. Tax revenues, you can see how the tax revenues are in no way going to keep up with the spending. Entitlement spending is going to double by 2050. And this is something that we all need to look at. The U.S. real per capita tax burden, okay, every year it's going up, and it's in the tens of thousands of dollars per person just in taxes. Everybody's share of the national debt by 2039, a kid who's born in 2015, so he's like 5 years old now, The day he was born, he had $41,000 in debt. He hadn't even gotten his first credit card. He was $41,000 in debt. By the time he's 18, it's going to be $91,000. And by the time he's 24, $142,000. That's not including the tens of thousands, in some cases hundreds of thousands of dollars in student debt. That's just his share of the national debt. The tax burden, when you include federal, local, and state, look at the total tax share, is close to 30% as a percentage of gross domestic product. So I'll stop with the charts on this one. You work 3 months of the year, at least.
At least.
Just for federal taxes. If you include state and local taxes, then it's roughly 120 days, or how many months is that? 4 months. Okay. So any nation that's ever taxed its people 50% or more, the people have just risen up and revolted and thrown the bums out. So our government is smarter than most have been. We're up to the maximum that people will stomach without coming out in the streets with pitchforks and torches. So they've resorted to inflation as a hidden tax. So by making your money worth less and less and less, they're taxing you. Anything where the government takes money from the people, whether in the traditional way of taking money out of your paycheck, or in the hidden way with excise taxes and inflation, it's a tax. Inflation is not just an amorphous concept. If the government does it to you and it costs you money, it is a tax.
Right.
So that's how they're able to tax us way more than 50% and say that they're not doing it. So how can you fight this? Well, the only way to do it is in the only two assets, the hard assets, that have protected people for thousands of years against inflation: precious metals and real estate. It's got to be the right kind of real estate. Don't just run out and buy some rent houses or some apartments. That's not the way to deal with it. If you have any questions, you can call me up. My number's 561-753-5998, 561-753-5998, and I'll share with you a video I've got and some other information on how to use real estate as a good defense against inflation. But right now, the very best is precious metals. So if you go to CFRNgold.com, CFRN, you know that one, gold.com, you'll get the Gold Education Starter Package, which basically will show you what kind of gold to buy, how to buy it, how to protect yourself, and how to avoid being scammed by, there's three major groups of people that are scamming people using gold. Most of these people were even in the gold business until a year ago. They were used car salesmen or aluminum siding salesmen or whatever, and gold started getting hot, so they now became gold experts. But some of these experts are selling counterfeit gold coins. I know about a Christian guy. He was a coin dealer, and I won't mention the city, but for several years, he was selling Chinese-made counterfeit bullion coins, and he had no idea he was doing it. He was ripping people off unintentionally. He was a good guy. He believed the guy he bought it from. So personally, when I sell gold to a client, although I'm really good at knowing the difference between a counterfeit and a real gold coin, particularly the bullion coins, I don't trust my own expertise. I trust my bullion dealer, who has 55 years experience and who can smell a counterfeit for 20 paces. So make sure, if you think about getting gold, make sure that you get this watch the videos, read the articles. I've had a lot of people that have heard me on radio and said, wow, they called me up and said, well, Dr. Tom, I'm so glad you told us about gold. I bought it from this online company or that company that advertises on TV. Well, they usually paid 20 to 30% more than they should have. Certainly more than I would have charged them.
Right.
Because if you think about it, if they can afford spots on primetime TV at $1 million for a 30-second spot, who's paying for that spot?
Yeah.
So
it's quite a premium.
So get the starter package. Start listening to the webinars on Monday nights. They're like Dwayne's, only instead of focusing on the futures, we focus on precious metals. So I think everybody that's a trader that's making money trading should set aside at least 10% of that for a time when you're not doing so well, or when you're sick and you can't trade or whatever. It's good to have money not all in one place. The Bible says don't put all your eggs in one basket. That's Tom's translation, but that's basically what it's saying in King James language.
Yeah, diversification.
And I think Dr. Dwayne would agree with that.
Yes, he would. Absolutely. Thank you, Dr. Tom.
Okay. Lord bless you all.
You too, my friend. Always a pleasure. We look forward to talking with you again next Thursday. And guys, go to CFRN Gold, one word, CFRNGold.com. Thanks, Dr. Tom.
You're welcome.
Okie doke. All right. Now, we were talking about the Concierge Trade Alerts. We made it through logic. Now remember, there's two kinds of alerts. Concierge are based on historic price action, and these are delivered every night shortly after the Globex Open. It's a static report. The numbers are good for the entire session, because as you can see on this chart here, typically they will trigger multiple times. There's once, twice, 3 times, 4 times. Okay. Now, we've got a 5th trigger coming right here, but we don't want anything to do with that one. Why? Because red and falling represents potential resistance. Now, is it possible we could just trade right through it like it's not even there? Yeah, that's possible. However, we understand that the potential for it to be resistance like it was here and here, see, and then price finally got back on top. But if you scroll back, you'll see that again and again. Red and falling, resistance. See here? Price tried to get through, resistance. You need price to get back on the other side of red and falling, back above the BBC. That turns red and falling into blue and climbing, and then off you go. And then the process just repeats itself over and over and over. Last night's Concierge Alert on the S&P was to be long 34.86, and as we can see, we made it up as high as 96. That's a 10-point move. $50 a point, that's $500 per contract traded. The first move, the initial move, took us up to 34.91. So that's 5 points at $50 a point, $250 per contract traded. Then we got below the trigger, did it again, did it again, did it again, but this time we've got resistance overhead. So this is why it's so important that you do not trade an alert just because it's an alert. Look at the chart first to make sure that market structure lines up with the alert. Okay, very important. Can't stress that enough. On the Dow last night, the alert was to be long 28355. 28355. And swing high was 590. So 590 minus 355 is 235 points at $5 a point. That's $1,175 per contract traded. Now, we had blue and climbing the whole time. On this one, though, you see how blue and climbing has become blue and flat? That has the potential to be resistance as well. Doesn't mean you can't take this trigger. You had one trigger. This trigger was still okay, but you just have to expect that this is going to potentially become resistance. Okay? So that was $1,175 per contract. Ooh. The entry to the swing high. Swing highs, it's very difficult to get out of a swing high because you don't know it's a swing high until after the fact. Now the exit signal on this one, yeah, it was a pretty deep pullback, but nonetheless, that's where it would have been. The closing price of that candle is 434. It's still 80 points at $5 a point. If you waited for the exit signal, still it's about $400 per contract traded. Okay, left a lot on the table, but nothing can get you out at the swing high or swing low except luck. And luck's just not a good trading strategy. Now, let's go to the NQ. Okay. And on the NQ, hang on. On the NQ, the alert was to be long 120.30. Way up here. We didn't get much of a move out of the Dow on the long side. And did I mention this is the best August for the Dow since 1984? And I think the S&P as well, so they said. So from 355, no, I'm sorry, from 120.30, we made it up to 38. That's 8 points at $20 a point. That's $160 per contract traded. The next one made it up to 46, so that's 16 times 20. On the short side for the NQ, it was 11,846. So we didn't get much of a move out of the NQ in either direction. The swing low was 34.75, so 46. Well, here's a little over $200 per contract traded. What's of interest now is we're at the highest weekly trading zone. We just had a bearish cross. So the high probability move from here, we trade back below this weekly zone, and there we go. Now the Russell, the alert was to be long 1567. and the initial move took us up to 1570. So that's $150 per contract traded, back below the trigger. Made another run up to 1575, so 67 to 75. That's 8 points at $50 a point. That's $400 per contract traded. And this one took us up to 69.5. And see, we still got blue and climbing the whole time, but this thing's starting to make its turn. So just like we saw on the NQ, on the Russell here, price headed at the trigger again, but I'd be very cautious on this one because you're passing through red and falling, and that creates a drag on the market, a resistance, until we trade high enough that this turns back up and becomes blue and climbing. And honestly, I don't see that happening. Doesn't mean it won't happen. I just don't see it. Now, a lot's going to depend upon the S&P. And the S&P, we pointed out earlier, that's that 100% Fibonacci price extension, which was from the low to the high to the retracement low. So that 14th century math said the potential swing high was 34.96, and we hit 34.98. Okay, so looks like we're going up to try to test it again. So on the 30-minute chart, we were struggling here. If we can get through red and falling, and there are times when we cruise right through it, but I wouldn't be too quick to move on this, because we've got two things. We've got red and falling, and then we've got these swing highs right overhead, and that's big picture stuff right there. So personally, I would sit this one out. Crude. Last night, the alert on crude was to be short 43.15. And from 43.15, we made it down to 42.95. That's 20 points, $200 per contract traded. From here to the zone, then we get back above, trigger again. We've still got red and falling. And this time, the swing low came in at 42, I'll call it 42.40. So that's $750 per contract traded. Then we got back above the trigger. Did it again. Still got red and falling. And on this pullback, we ran into the BBC each time. So you pull back to the BBC, leg, pull back to the BBC, leg, pull back to the BBC. This time we're not going to get above that trigger. And as this starts to curl, that can be support. So keep an eye on that. On gold, the alert was to be long 1969, which is right here. $1969 up to 1987. That's going to be 18 points at $100 a point. From 86 to 69. Now the high was 87. 1987. Just calculated that. 1987 minus 1969. $69. Add $100 a point. That's $1,800 per contract traded. This move right here. One contract, one 30-minute candle. On the short side, 1939. Right there, 1939, and the swing low was 1470, so we'll call it 1915. So 39 minus 15, that's $2,400 per contract traded. 24 points, $24 at $100 per dollar. A $1 move in the price of gold pays $100. $1 move in silver pays $5,000. But that's what happened right there. Silver, the alert last night was to be long 27.77. 27.77. Swing high was 28.03. So it's about $1,200 per contract traded. The short side for silver was 26.75. $26.75. And the low was 26.56. From 75, it was 55, it would be 20, 19. $1,900 per contract traded. Is that right? Let's see. Let's do the math. $75 minus, and the low was, we'll call it 57. $900 per contract traded. There we go. That's the ticket. Okay, so that covers the S&P, the Dow, the Russell, the NQ, crude, gold, silver, a little something for everybody. And again, so far this week, those were the Concierge Trade Alerts, the static report. The alerts that come around the clock as opportunity presents itself, live in real time. Week 108, we've issued 41 alerts at Sunday night at 6 p.m. Eastern. Still waiting on the results of 2, 3 never triggered, 36 actionable alerts, 3 stopped out, based on not risking more than $300 per contract, per trade, less when possible. So that's 8% of actionable alerts stopped out. Okay. Now the average is 20%. So anticipate a few more stop outs before the week is over. Now let's go to our good word for the day. Luke 18:40. When Jesus heard him, he stopped. And that's our topic today. Stop. Is there room in your schedule for interruptions? When you write out your day plan, do you pigeonhole a couple of spots for interruptions? Author John Walker writes, Jesus stopped when people needed help. He saw interruptions as opportunities to show God's love. Woe to those who are so busy saving the world that they ignore the perceived interruptions of those in need. Like the Good Samaritan, we should be ready to stop for someone who's hurting. 1 John 3:17 says, "Whoever sees his brother in need and shuts up his heart from him, how does the love of God abide in him?" There are going to be interruptions in your day, in your week, and in your life. Jesus saw those interruptions as opportunities. When Jesus acted out of love, people recognized God has visited his people. Luke 7:16. Chuck Swindoll writes, "The one who said, 'Be still and know that I am God,' Psalm 46:10, must hurt when he witnesses our frantic, compulsive, agitated motions. In place of a quiet, responsive spirit, we offer him an inner washing machine, churning with anxiety, activity, resentment, and impatience. But you can change. Here's how. Admit it. Acknowledge that you're too busy and something must be done. Now. I did that recently, and through tears, my family and I cleared some bridges, the thorns had overgrown. Stop it. First you got to admit it, then you got to stop it. Starting today, refuse every activity that isn't absolutely necessary. Does that sound ruthless? Well, so's the clock. So is your health. Admit it, stop it, maintain it. It is easy to start fast and then fade quickly. Paul told the Galatians in Galatians 5:7, "You were running well. Who held you back from following the truth? It certainly isn't God. He is the one who called you to freedom." Admit it, stop it, maintain it, and finally, share it. Once you start gleaning the benefits from reordering your priorities, tell other activity addicts they'd love to stop if they only knew how. And now you do. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.